cutting tax rates does not automatically mean you're going to get less tax revenue. There are loads of examples where increased tax rates have led to lower tax revenue. So I'm going to explain why cutting taxes is a good thing to do. The level at which you start losing your personal allowance has been frozen at £100,000 since 2009, which is effectively a tax increase. Lots of people now are paying an effective marginal tax rate of 62%. They got fed up with paying this high level of income tax, and so they keep doing the same job, they restructure, and they move to places like Cyprus, the Isle of Man, or the United Arab Emirates, and now we're getting zero tax revenue from them. Rachel Reeves in her last budget increased national insurance contribution. Unfortunately, she also increased the national minimum wage at the same time, and that has led to over 100,000 redundancies in the hospitality sector. So, increasing national insurance contributions and coupling that with another stupid policy has led to a load of redundancies and us getting less tax revenue. Compare this to George Osborne, who reduced the corporation tax level by 1% per annum and actually got a higher level of corporation tax. Therefore, reducing taxes and at the same time accompanying this with some sensible policies will actually increase the level of tax revenue you get. Let's take the 17,000 people who left the workforce last year due to anxiety and other invisible illnesses and now earn more on universal credit and PIP than they did working. If we reduced the income tax rate from 20% to 10% for earnings between £12,570 to £25,000, and at the same time introduced a policy that meant that all people claiming benefits physically able to work must go and do community service such as litter picking in order to get their benefits, then I bet that we would get a lot more income tax revenue because a lot of these people would return into the workforce.